Welcome to the weekly market wrap-up. I'm Hannah Bernard. Even seasoned investors ran out of antacids this week as the Toronto Stock Exchange swung wildly. First up by triple digits on Wednesday, the TSX crashed a whopping 300 points on Thursday, following yet another Saudi cut in the price of oil. How bad was the spill? Let's find out. U.S. markets hit more record highs early in the week, only to stall on Thursday. The Dow notched new records Tuesday and Wednesday, then stumbled 12 points Thursday to close at 17,900. The S&P 500 also stumbled on Thursday, losing 2.4 points to close at 2,071. And the Nasdaq, which had been steadily gaining over the week, also fell Thursday, dropping 5 points to close at 4,769. Now let's turn to Canadian markets, which felt the brunt of lower oil prices. The Toronto Stock Exchange had shot up 134 points on Wednesday, but the bottom fell out on Thursday and the TSX plummeted 300 points or 2% in overall value to close at 14,455. The TSX Venture Exchange also continued its steady drop, losing 14.25 points to close Thursday at 707.38. So what's going on with oil prices? Simply, the price war is escalating as Saudi Arabia slashed its January prices in the United States and Asia. The new prices from Saudi Aramco come hot on the heels of Saudis blocking a production cut by OPEC nations last week, which sparked a plunge in crude prices as the country seeks to stay competitive and defend its market share. Today's cuts send oil prices sliding again. The moves are key to Canada, of course, given its reliance on oil production. Already, economists say Canada can expect a significant hit to oil revenues if the rout in the market is sustained. The price of crude oil traded on the New York Mercantile Exchange fell 64 cents to $66.74. Hang on to your hats, America. There's no easy way to say this, so I'll just say it. You are no longer number one. Today, the United States is number two. Yes, it's official. The Chinese economy just overtook the U.S. economy to become the largest in the world. It just happened, and it's almost as if nobody noticed. The International Monetary Fund recently released the latest numbers for the world economy, and when it measured national economic output in real terms of goods and services, China will produce $17.6 trillion worth of goods and services this year, compared to $17.4 trillion for the USA. As recently as 2000, the US produced nearly 3 times as much as the Chinese in the longer term. And now to winners and losers in our picks for the week. The winner for this week is Carbonite Inc., ticker symbol CARB. Shares of the data backup company soared nearly 23% on Wednesday after the company confirmed it received an unsolicited proposal from J2 Global Inc. to acquire all outstanding shares of the Carbonite for $15 per share in cash. Carbonite provides secure cloud backup solutions with anytime, anywhere access to files stored on its servers. The company charges a flat fee for 1 year of unlimited cloud backup with discounts for multi-year subscriptions. And the loser for this week is Post Media Network Canada Corp, ticker symbol PNC.B. Shares in Canada's largest newspaper company dove 15.5% Wednesday on news of further declining ad revenue. The company released its Q3 earnings report Thursday, which showed a net loss of $20.8 million for the period, a 10.8% decline in revenue to $171 million. Post Media Network is the owner of the National Post and another 9 metro dailies across the country. During this fall, they announced the $316 million purchase of rival Sun Media, a chain of 175 English-language newspapers and associated websites. Well, those were our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. And that's enough about this week. Now let's turn to Baystreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is Diamond Foods Inc. with an EPS forecast of 24 cents compared to 18 cents in the prior year quarter. Next up on Tuesday is Krispy Kreme Donuts Inc. with an EPS forecast of 20 cents compared to 16 cents in the prior year quarter. In November, Krispy Kreme launched its new line of individually wrapped fruit-filled Danishes into U.S. grocery stores. Finally, on Wednesday is Toll Brothers Inc. with an EPS forecast of 71 cents compared to 52 cents in the prior year quarter. And now here are 3 Canadian stocks to watch next week. First up on Tuesday is Transcontinental Inc. with an EPS forecast of 72 cents compared to 75 cents in the prior year quarter. In mid-November, Transcontinental sold its consumer magazines and their websites, as well as all related platforms, to Quebecor-controlled TVA Group Inc. Next up on Thursday is Dominion Diamond Corporation with an EPS forecast of 21 cents compared to a loss of 3 cents in the prior year quarter. And finally on Friday is Empire Company Limited with an EPS forecast of $1.32 compared to $1.15 in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News and Baystreet.ca, I'm Hannah Bernard.